Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name's Doc Severson. I am joined by Dave Lukas over here. Today's Monday, the 24th of November, and how about that? We have some positive price action
Yep.
for once. It's been a pretty wild. I mean, really, the shot over the bow that get the whole everything started was on the 10th of October, and that
hmm
was when Jerome Powell said, "Oh, there's no guarantee that we're going to cut rates
Yep.
in December," and everything kind of shook out from there. Then all of a sudden, after that, Michael Burry comes along and is like, "Hey, I'm short the whole AI infrastructure," and that
Yep.
rattled a lot of people. And I think we've seen like this snowball effect of like one piece of bad news after the other. And what was really interesting was last week we got good news, and that sent everything lower because it's like,
hmm
well, is that the best that we're going to get, or is that already priced in?
Yeah.
But now today, I think what we're seeing is some good news about Amazon reinvesting in the AI infrastructure. We've got other sorts of good news out there. We've got Trump talking to Xi of China again,
hmm
which is always a good thing to kind of settle down the noise for the trade war. But yeah, so Dave, I bet you're setting up your artillery for the end of the year here.
You and I talked about this at the end of last week. I talked about it to my students and everything. I still think we're getting a really uh, ripping end of the year rally. And the two scenarios you and I talked about last week were number one, if the market thinks the Fed's going to cut, then you're going to see this thing really run hard into the Fed and front run that cut. Now that was in doubt up until Friday. What changed all this? We got dovish Fed speak. That's what changed everything, right? That's where the market turned on Friday. That's where, we sold off on the good news, right? We sold the news off of Nvidia, even Walmart. Walmart showed the consumers really strong. And so we sold that news because everybody is it was looking at the Fed. All right, the Fed is going to hold rates steady. That's going to put pressure on the rates and everything down the line snowball, right? Well, we got a lot of dovish speak on Friday, and that's when everything turned around. It's continued today. And so the scenarios you and I were talking about on Friday were, yeah, if the market thinks the cut's gonna happen, and the dovishness is gonna win, it's gonna run into that Fed and front run it. If the market thinks that the Fed's not gonna cut rates, I would have expected it to dump hard ahead of that to scare the Fed, into cutting rates. But after Friday, it looks like the market and even like Goldman Sachs came out and said that 25 basis point is what we're getting. And so the market consensus is now, I think even Friday, like Poly market jumped from like 21 to 70% of a cut, after that happened.
We had
Because it only takes a few
75%
governors
this.
now.
We had 75% this morning. I don't know what it is right
Yeah.
now, but
Yeah.
I think Poly Market has even gone higher than that.
Yeah. So that all flipped, and that's what's done this and changed this whole trajectory. Plus, we did exactly what we needed to do. If you bring up the charts, you can show them, right? Where we had we had an exhausted weekly chart. We needed to charge that up. We have an exhausted monthly chart, and so typically that's a drag on things. And so you get this sideways action. We haven't gone anywhere, honestly, for about 7, 8 weeks. We've been in a 200 point range basically on the S&P. So this has all been what was needed to get things charged up and ready to go. And now we've got a weekly chart that looks like it's just starting to roll over, with Friday and today, right? So still a little early to confirm and say, yep, the trend is on, but it certainly is leaning that direction now.
We talked about the similarities between what we're going through now versus what we saw in the mid of 2024. So here is that big July monthly candle where we went way down and we dropped
Mhm.
10%, and then we came all the way back again. And then we had some dips into August and September as we,
Mhm.
got closer and closer to the election with all the head fakes and dips that were going on there. And that started with the same amount of lack of energy at that point. Now, the only thing that's different here is as we get into December, which is next week, is this energy going to go any higher? And the bad news here is what happens in December is this candle falls off the back. So this is the only thing that's really keeping this from going lower. And so we're going to be left with one extremely stretched. So the bad news is that this number is not going to get any better. So I there's everything reason to believe that we may end up going a little bit higher here, and maybe even broaching up to 7,000. But I think it's going to be very difficult to get past that point. So we may get a nice move. Again, this is just my opinion, but I think if we do break out, it's going to be based on what's available through this chart and not this chart. So the biggest difference here is that we did several months of shake and bake back here in 2024, and that allowed us to end the year strong. And I don't know if we're going to be able to do the same thing here in 2025. I think there is a path to going higher. There is a path to getting up to 7,000, but I think things get to be very difficult as we
I
get up to that point.
I didn't say it would end well. I just said that I think that's what we're going to get. I think
Yeah.
the weekly chart can go for 6, 8, 10, even 12 weeks, right? If it really gets going, it can burn itself all out in, a month. And it just looks like it's shaping up for that. In fact, if you pull up the hardest thing for me always is monthly chart exhaustion. Because if you pull up a longer term, just monthly chart with the energy, and you'll see where it's into exhaustion and it continues grinding higher for months on end and even charges itself back up on the fly. I'm not saying that's what's going to happen here, but that's something that I've seen in the past that makes it, a little tougher. So like there's a good example back in 20, right after 2020, we've got, low energy, right in the, yeah, low energy through there, low energy through there, and this thing just keeps grinding higher, right? Until you get that big move, right? That finally charges it up, and you can see it charges up in the span of like a month or two, right? So there's a good example of a pretty exhausted monthly chart that just keeps grinding higher. And so I could see us again running into the beginning of the year and then selling off and charging that monthly chart back up. Something
So
like what you see right there.
so the bad news here was in that example when we were down there at the end of in about two-thirds of the way through 2021. What it took was us falling into a bear market for this thing to build
Hmm.
the energy back up again. And so we're going to be in that same potential position. So we might be able to, like you suggest. I agree that this energy right now may end up unfurling. This weekly energy may end up unfurling to the upside. That is a path of least resistance right now. If this is the best that we can do with all the bad news and all the crap that's been thrown at this market, is to drop 6% on the S&Ps and 8.9%, I think, on the Nasdaq. If that's the best that they can do, then we'll probably the path of least resistance is to the upside. But I think both you and I are saying the same thing: is that
Hmm.
it's gonna be limited. It's not an unlimited. We're not going to be able to get that blow off that we're really looking for, where the S&P jumps another 500 points. That's not going to happen unless we do the 10% dip. If we do the 10% dip, then we will get that blow off. So, anything can happen at this point. We could still set up for a lower high and roll over. But I agree that right now, what you're seeing is that the weekly energy is coming out to the upside.
Yep. And I think we'll know more. This is always a tough week. I said this to my students over the weekend. Thanksgiving week is a 3.5 day trading week. And it is, I mean, after really tomorrow, it's all algos and everything trading. It's, like you call swivel chair day. These guys, the big traders are out. They, do their trade in the morning, swivel the chair, and they're out of there. And so Wednesday is going to be lower volume. Friday's a half session, lower volume, prone to bigger moves, typically positive. So we're just kind of seeing. I think we're seeing the early get, for this week, and then as we get into next week, I think is when we'll truly know how strong this trend is. if it's breaking out to the upside.
So what I'm showing here is that the spiders have a 15-point expected move, plus and minus. So which is 150 handles on the full S&Ps. So
Mm-hmm.
the expected move where the price is going to be closing by Friday at over the weekend was priced in at plus and minus 15 points, a 300-point range that's here. So we could easily
We're up
end up,
we're up 100 today,
yeah,
so
we could. I mean, we're more than halfway there to the upside target, but it's not beyond reason to expect something like this to happen. So
yeah.
do look for, if we end up pulling back down, one of the things that I always love to see is was what I call the scary higher low. So markets will start to break out, and then all of a sudden everything just goes, underwater, and we set up what's called this higher low still, but that is it's almost like a bait. It's almost like a trap. It ends up being a bear
Mhm.
trap. So this is how we could potentially break higher from here and get some velocity from this move. So lots to see. Hey, let's see. Mark Donaldson saying tariff inflation seems to be not talked about
Well,
anymore
that's what they came out
by
with
the
on
Fed.
Friday. That's what Williams said. Like, there's supposed to be inflation with tariffs. I don't see any. Where's it at? Right? So, like, it'd be hard, so he said something along the lines of, where's it at? And, using it as a justification to keep rates higher when we're not getting it. I don't see that. Like, that was the comment and something to that effect. Um, the, the other possibility is this thing just goes. So, like I said, it runs up into the Fed, and then you get your sell event. That's when you get that pullback that you're talking about. Um, again, it's predicting, as we all know, is a crapshoot. You just price is what matters, and just right now we're just watching how this energy's going and what it looks like.
But
And
the biggest
yeah,
thing that we're using here is not necessarily predicting the future. What we're looking at is the character of what the price is telling us. So
yeah,
it's not quite tea leaves, but when you look at the price action that we have here, this is still relatively gentle. These are gentle moves. These are not like back to back, like, hey, everybody out, fire in a crowded theater kind of thing. These are relatively structured, orderly sell-off. So even though we had this nasty ass reversal day last Thursday, that's one of the most brutal reversal days that I think I've ever seen. What happened to it? It's gone. It, it's
mhm.
it's all been eaten up now with accumulation, with certainty coming back into the market. That's all it takes, and that these are the clues that we're looking at to tell us which is the likely path of least resistance for this market. So when you compare that versus, let's see, let's go back to the beginning of last year. Now, what was happening last year? We did have a nice bull, but we kept getting these moves. Every time we'd get up here, we'd get rejected, and it just could not get anywhere. And so that was a move to tell us that we were getting into a broadening pattern.
That period right there, we had those like three gaps. That is one of the strangest patterns I've ever seen, where it's like go 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 gap down, go 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 gap down. Okay, like that to me was like this market's getting unsteady. It's getting frothy. That is not normal action to see like that. So that for me was like something's coming. I don't know what, but and then obviously we got our catalyst with the tariffs, but the market just needed something. The tariffs were the excuse, right? So, but that's when you start to see that again, uh, change in character. Yeah, non-linear, right?
When you see
Action.
nonlinearity, when you see stuff, linearity is quite simple. When you look back and see market action that's like this, like dun 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 dun, the same thing happens over and over again. It's like Groundhog Day. You compare a quiet and trending market versus this insanity that happens here where it's just that there's nothing that sticks. And what you will see is you'll see the volatility increasing. It's almost like, when you would drive on ice and snow, when,
Mm.
all of a sudden your rear end kicks out. And so you correct and then you overcorrect. And then next thing you know, you're spinning like that. We've all done that, right? So this is the same thing that happens in a market when the volatility starts to become unstable like that. This is where you get the bear moves. And again, if we compare what's happening back then versus what we're seeing now, it's not even close. Now there is a little bit of change. That there's more realized volatility. Certainly there is. That's always going to be the case when we have corrective markets. Always going to be the case. It's going to be more volatile. We're going to see more realized volatility. But this is nowhere close to being the type of volatility that will grenade overnight. So, barring some kind of, exogenous event, this should probably release higher. Again, that's as close as I can come to a prediction.
And just chart pattern wise, you got really what amounts
Yeah,
to a bull flag on the
that's a bull
weekly chart.
flag. That's a bull
Hmm.
flag. So it's hard to look at that and not see it again. When we compare this versus some of the other nasty moves, that we've seen in the past, um, where just stuff starts to get, here's the beginning of the bear. And you can just see this. You can start to see this now, where you just get this megaphone pattern, and it just gets to be more and more unstable, and all of a sudden, massive lower highs set up. Just when everybody's leaning along, all of a sudden the rug pull comes along, and down we go. We've seen these things so many times before, and this does not look like the same thing. Now, with that said, this could certainly turn into something like that in the next month or two. But I think for right now, the path of least resistance means that we're going to see maybe higher prices as we close out the year.
Another thing to look at too, you and I were talking about this, is, crypto's obviously been taken to the woodshed, but it may be starting to turn a little bit. So if you want to pull up maybe IBIT and kind of show, I mean, we got close to the all-time lows there, and now it looks to be turning a little bit.
Well, we had a 30, what people need to understand is there's a big difference between a correction, a normal corrective pattern, which for crypto, we can drop 32%, and a few weeks later, we're at all-time highs. I mean, this is normal for crypto. The other thing I like seeing is I like seeing a descending pattern which actually undercuts and goes crazy to the downside, just like I like to see an ascending pattern which pops out the top, because that shows that it's about done. It's probably going to reverse. So this certainly could reverse back up, but this is nowhere close to what we had back in 21
Mm.
that really got ugly here. So here was the top of the market at the time, and it straight down, and then you're setting up bear flags and everything like that. We don't have the same thing now. This could turn into something ugly, so it still has the potential to do that. But it all depends on what happens here in the next month or so. If this just comes up like this, and then we get another leg down, then we're probably
Yeah.
crypto's probably toast for maybe the next year or so. But on the other hand, if we see something like this, where it comes down to a higher low and drives off of that, back up above 100,000 again, then no harm, no foul. This is just a deep correction. So
Yeah.
what happens in the next month is going to be particularly important to anybody holding IBIT or ETHA or any of the spot cryptos.
A lot of things flying around in crypto right now, and it's hard to make sense of what's true and what's not. There's a whole thing about JP Morgan that's, selling it off, trying to bring it down. There's uh, something about Trump going to sign for a Bitcoin reserve and stuff in the coming days, even today or something. So there's all kinds of this speculation and stuff flying around on this. So just, I'm just watching the price action. We hit the lower Bollinger Band. We were pretty exhausted. We're getting a bounce. How far do we go? Don't really know, but I think it's going to be hard to trend downward for a little while. We may need to either go sideways to up for a little bit.
So
So it's nice to see it bounce a little
so
bit
the end of this year into 2026 is going to be really, really interesting because,
across the
you know,
board.
we're on just about every market that we follow, we're at a real tipping point, right?
Hmm.
So it could go one way or the other. Like if the equity markets are able to stabilize and then base out for a little bit of time, without screaming higher, they may set themselves up for a really good 2026, even though, we obviously have financial ruin and peril right down the road with what the Fed's doing and the fact that we're spending more on debt than we are in defense.
Hmm.
All kinds of bad things are happening, but still we may end up with a higher market for that point. And crypto may go through the same thing again as we get
Yeah.
closer and closer to literally no BTC left out of the 21 million. All of a sudden, people may figure that out really quick, and we may have a screaming run here. So, even
Hmm.
in the face of peril, as people say, hey, there's all these issues with AI, and quantum computing can crack this stuff. Supply and demand may kick in, and we may have that final run here in 26.
Yeah, so to kind of leave you with some thoughts, I guess and we can, if there's a couple other charts you guys want us to look at, we can do that. But if we do get a rip and rally from here on that weekly chart, and that burns that weekly chart out, I think it's gonna go through the holidays, and then as you get into January, you're gonna have an exhausted weekly chart alongside an exhausted monthly chart. That is a huge risk off signal. Now, timing on that is really hard. Sometimes right away, when you get to that point, it happens and it starts to correct. Sometimes it takes a month, or longer before it actually happens. But that is the time to get, more defensive. Option premium is going to be very hard to get if you run that high. All the volatility is going to be out of the chains. So selling options at that point is harder. You have to almost sell at the money. And so like just watch that because that's your like talk about the next 10% correction. I forget the stats. I think what's a 10 correct I think a 10% correction is once every 1.5 years, I think like or something like that. It's not every year. Let's put it that way. I saw a thing on it the other day. But I think it's a pretty good rule to follow. If you get to where you got weekly and monthly exhaustion combined with each other, it's going to get nasty for a little while. Probably a good month to 8 weeks. So that's the time to go more risk off, maybe directional, right? Buy calls, buy puts, if you want to play that type thing. But that's you get defensive, take your profits, get ready at that point. And then if you get a 10 percenter, you should rip off of that. It'll do everything it needs to just continue higher. So that's how I'm looking to play the end of the year to the beginning of next year right now.
We got an interesting question that came in. I'm not even going to try to pronounce your username. I'm sorry about this, but you know,
Krasimir Sobel? Got it.
yeah, you got it. Um, so he's asking about trading futures option spreads in the after hours. So not just single options, but also
Hmm.
spreads. So my experience with them has been, it's not bad. Like what I found is that the spreads between the bid and the ask for futures options are relatively wide, but what happens in the after hours when the liquidity goes to zero, when nobody's trading them, is they get just a little bit wider. Now, the good thing with futures options is that's as wide as they get. They're not like the equity options that get manipulated and just, they turn into roach motels because you'll run into like, well, there's a bid of 30 cents by an ask of $5, and then it's just
Hmm.
untradeable. You can't do anything all with that. But what we found, and Dave and I have been playing quite a bit of futures options through the years. on specific strategies. Now we're only doing one option at a time. We're not doing spreads.
Yeah.
Like options spreads where you're buying and selling at different strikes. So that may make it even worse because then you've got two options at the same time that you're trying to negotiate. But my guidance on that is that I would try to enter, if at all possible, during the live market, during the cash market when there's higher liquidity, because there's a better chance of you getting a tighter
Yep.
spread and a better fill. And what I've noticed is in the after hours, this is the power of having a good limit order into place. I've gotten lots of these things filled at my limit price in the after hours, which is great. I love that. But more than likely, it's going to the actual ask price just to buy it back, and I'm not negotiating any exit at all. So spreads do widen out. The bid-ask spread does widen out in the after hours. So I would avoid entering in the after hours until this normalizes. Eventually, we're going to have a 24-hour round-the-clock, 7-day-a-week
Yep.
market, and then the volatility and the volume is going to be spread out amongst that time. And maybe there's things that you can do to improve that, such as to wait for the Japanese, the Asian Open, or maybe the European Open, and in the wee hours of the morning, may increase that. But for right now, I would stick to the U.S. hours.
Yeah, we like to keep it pretty simple in what we do. We actually trade the minis, so we don't even trade the ES. So, Doc, I don't know if you can pull it up and we can hit that for a second. So how do you survive wearing an Ohio State jacket? I don't live in Michigan. I live just outside Columbus, Ohio. So that's how I survive. Doc and I are both Buckeyes. So we had to sport the Buckeye for today, if you guys are noticing. So, but yeah, we trade the MES. And so the MES is a little bit different because you get uh, a lot of good uh, well, your margin isn't as big. So your money required to sell sell a put, right, is very little, actually. So Doc, you can explain span margin as you go through there, but the MES is like 1/10, so you don't need as much,
No,
and
no,
you still got a really nice return.
nobody can explain span margin. There is no set answer for what span margin is, but basically, what Dave and I are doing is we're going out about 90 days. We're selling, in this case, a single option here. We don't need to do 10 contracts. So a single option at this, and you'll look at the price and you'll say, oh, that's 64.75. That's not the case. That is that times 5. So it's going to be, so if we actually look at confirming and sending this, we're going to see that this is actually $300. So that, it is a little bit weird because you look at an option that costs 60 is it when you multiply it by the option contract multiplier, which in this case the MES works for $5 per point, and so you multiply this by 5, and then you've got that. But you can see, like if we're looking at 60.25 here. It's a couple of dollars wide. It's a couple of dollars wide for this option, which is not bad. And the thing I like about this is that I kind of know where I'm going to get filled. There's no games in here. There's so even though there's not a whole lot of liquidity, but it does get wider in the after hours. It does get wider.
And you look at the buying power effect when you do like one of these. So if you just hit confirm, but obviously don't send, then you can show them what the buying power effect could look like. Um, that's the nice thing about them is they obviously don't affect your buying power. Um, the only thing that does affect your buying power, you can see. So well, you're gonna do 10 of them,
Yeah,
so
so
you can see the credit versus
$1,300.
that.
So
But
try selling an S&P naked put
yeah,
that
and
doesn't
getting
cost you. What is the SPY these days? I mean, the SPY is
670
yeah, it's
something
gonna
now.
cost you $70,000 of margin for one contract.
Yep.
or if you're trading the full S&Ps,
Yeah.
600,000.
And then look at the return,
Yeah, versus
322.
$1,300. I mean, so
Yeah.
these are very low. Now the span margin comes into play when this
It
gets a lot
crashes.
a lot bigger as the price comes down and attacks your
Yeah.
position. So
Yeah, so if you get they're great when you have a nice uptrend. Like we just got a 6% pullback. Great time because you get some higher volatility. You get, some of that higher options premium. So, like for example, I was able to sell at 5,200 Thursday of last week, right? So I was set 5,200 on the futures, and you can see this thing's at 6,700. So we need a 20% correction in the next couple months for me to, get into trouble on this thing. But there's very specific rules we follow on how we manage these. We don't stay in for the full credit. There's a number of things that we do. But when you've got a nice, quiet and trending like bull, they're very systematic. You can like we've been in periods where we've done them every single day for a period, right? But when you do get a big correction, and the more it goes up, that's why they're great after pullbacks and the increase in volatility. But if you've been going for a long time and you haven't had a pullback, you want to lighten up on these because again, that premium to get to sell at gets closer and closer to the money to get what you want, and that's when you get caught. And so there's been a few times where we've got rules, we get stopped out, we got to take the L on them. But we've learned how to, I think, run them pretty well over the years.
okay, I think we're good. We're getting past our time here, so I'd like
Yep.
to thank everybody for joining us today, and I hope everybody out there has a great Thanksgiving, and spend some time with your family, and just relax from the market for a couple of
Yep.
days. Come back and reset, and I promise you, it'll look totally different by next week.
And then
So
tune in Saturday to watch the Buckeyes just absolutely
yeah,
massacre
it is time. It is time for us to,
Michigan.
after 4 years of frustration,
Yeah.
it's gonna be joyous. Thank you, everybody. You guys
Bye,
have a
guys.
great Monday. Bye now.
Thanks.